Hey guys, back with the live execution series, and today I have a very exciting video where I'm going to be showing you two trades that I took that were both wins with very high RR and some very incredible risk management. I'll be covering what my analysis was and what my thought process is through these trades. Now let's get straight into it. So looking at this 1 hour, you could see we had a very large new day opening gap. So coming through Asia, London, just continuous bullish order flow. And our main targets were going to be these daily highs up here. Okay, so something to mention is we trade Silver Bullet, and part of Silver Bullet is taking a look at these red folder news, orange folder, just seeing what kind of volatility we're going to have. So we had 9:45 a.m. red folder and then 10 a.m. orange folder. Now let's see how that translated on the charts. So most of the time, unless there's a very clear setup, I'm going to sit out of these trades until I can actually get a gauge for where the market is going with these red folder, orange folder. So first of all, about 9:45, nothing crazy here, not much of a reaction, but right away you'll notice that we're very choppy going into the session. So I'm going to be extremely cautious at this point. So right here we have the 10 a.m. Orange folder, a pretty large spike. At that point, I'm waiting for one side to get taken out. I do like to target data highs, data lows. However, it's not very clear, and it's not what I like to see. There was a decent trade, a decent long in here, which would be like this long with the inversion, but it's really wasn't something that I was too interested in, so I didn't take a trade there. But you could see we took out this initial daily high right here along with the data high, and we had a pretty bearish reaction to it. So you can see we start pulling back. Something I notice is there's some fair value gaps in here, but along this side, there's not much resistance. So that's kind of telling me that, okay, like we could probably trade through here. I'm not sure if we could trade through here, but let's consider taking a trade. Okay, so my initial entry was on the 30-second because there was no other PD arrays right here. But I saw this singular inversion and I saw this one. So initially I enter through this first 30-second inversion, very tight stop, and then I add into this one, and then I'll go into the video now. And so that part's missing. Unfortunately, I didn't get the start of my entry, but you're gonna see that's where I entered at. That's one position right here, another position right here. So very low risk because I entered with only one micro and then scaled in one more. And I'm just keeping that risk very tight because I know it's a choppy day. I know that we might not get our full expansion. So I'm just gonna play it conservatively, okay? And in terms of targets, what I was thinking here before we get any further, I liked this low because I believed it was somewhat of a protected low, because if we look at the 15-minute, it was inside of there. So I'm thinking, okay, we might take that and we might come back up. Obviously that doesn't happen, but that's hindsight, you know. I like how I managed the position, and let's get straight into it. Okay, so again, that initial entry, inversion right here, inversion right here. So what I'm focusing on right now is this. So we had a 5-minute within this leg. So you can see right here, I'm anticipating that we're going to invert it. And then right here, you can see that we invert it. So what that's telling me now is this leg is very vulnerable to come down and hit these lows. However, I'm not super convinced because we're moving very slow. I do want to add into this, but it's not something I want to rush into too crazy. So right here, believe we start getting news candles. Yeah. So we print a news candle. So the high comes in, almost stops me out. And so I'm just gonna keep an eye on these. Okay, so we come back up. Remember, we still have that 5-minute inversion. So our bias is still correct. We're still bearish. And so right here, I'm starting to think like, okay, I should probably add into my position. So right here, sure enough, right here, I'm looking to add because I know that we're trading past this. We're gonna invert this bullish fair value gap and create an inversion. And something else to mention is sometimes you can't get scared when you have all of this consolidation, because what ends up happening is we create more and more lows, and then that's going to give you more confidence to add into your trade. So I don't freak out when we go up and down, up and down. Like sometimes I want to see that because what it's going to give me is more confidence to enter a second position or to hold my position, because I see all this accumulation. Like I know we're going to trade through these. Like this data low, like it's super obvious where we're going to trade to. So that's why I'm adding into this position. I don't add into every position, but that's just how I did it right here because I saw it was fit. We started in a deep premium. Sure, we're going in more of a discount now, but overall our bias is very, very bearish. Everything's leaning bearish, and that's what I like to see. Okay, so we trade lower, and then pretty much news candle comes in. Hindsight, oh, I should have had my take profit farther, whatever. I was happy. I was very happy with this trade. Started off with $90 of risk. So we had let me go back. So $690 of take profit. Our original stop loss was $90. So that's almost AR. Like that's awesome. That's exactly what I want to see out of my trades. So yeah, this is a very good technique to learn, which is pyramiding. I'm going to create more videos on this. I'm going to teach everything I can on this because I believe there's profitability and there's ultra profitability. And I think this is what you need to do to achieve that ultra profitability. But anyways, on to the next video. Analyzing our second trade, let's look at the 1 hour and see why the bias was so obvious and easily seen. So obviously we had that bearish expansion earlier in the morning, which was that 11 to 12 candle. And so we're going to have a market structure shift in the form of displacement and then creating this fair value gap. Now we had a bunch of sell side left. So I might not be aiming for all the way down here, but I am going to look for some of this range to be retraced into. So the most obvious thing right here is this continuous respect of the hourly fair value gap. If we drop on the lower time frames, you see that again, 30-minute fair value gap, even the 15-minute. I love to trade this 2 to 3 p.m. PM silver bullet because sometimes you're going to have lunch liquidity. It's just usually where I like to look at. And so I occasionally trade PM session, not very often, but what I like to do is I glance at the chart. I look at it on my phone because usually I'm away from my desk. So I glance on the higher time frame. If it's not super obvious, then I don't trade it. I should be able to look at it and be like, there's a setup in there. There's a fair value gap. There's a clear draw. If there's none of that, I don't even touch PM session. Like just a good rule of thumb. Like if you want to improve your consistency, you're going to have a lot choppier days in the PM session. So typically I like to not trade it so often unless there's a very good setup. So looking at that 1 hour, we're going to have that bearish bias and we're going to find some setups in here. Let me see if I could find my entry and then we'll go into the video. So I saw this turtle soup right here. We also had this news candle. So we take out that high and we have all of this sell side left. And now let's get into the video. So initially I actually take a small loss in here, which was I was trying to short turtle soup right here. But then you'll see I get stopped out. I short again, I get break even, and then one more time, one more attempt. And you're gonna see, so I market order in right here, down here using this. I'm gonna put my stop at the high, $50 loss. That's nothing, you know. If I was to get stopped out, I might stop trading here, but yeah, this is very tight risk, and this is how I like to trade the lower time frame. I like to enter with 1 or 2 contracts, and I just build up, and you're gonna get very good risk to reward here. There's a higher chance that you take more losses on the lower time frame, and that's why risk management is so important, trading the lower time frame. So let me skip through here. I do add, let me see if I could find it. Once we start displacing, I start adding into this. So right here, because I'm anticipating this inversion to be inverted, while also trying to keep tight risk. So I'm break even already. I'm just expecting us to run through here. Again, we have a data low. That's awesome. This consolidation does not scare me. If anything, I like it because we have accumulation, we manipulate. Now I'm expecting that distribution using that 2 p.m. silver bullet candle. Okay, so we trade lower. And this is a very long time span, so I'm just going to scroll through here. And so we do invert here. I'm not looking to add because we are a little choppy. There is a good chance that we come back to our original position. So I'm aiming for that lunch low. So what typically happens is lunch will accumulate sideways in either direction, and one side will get taken out. So in this instance, a buy side got taken out from right here to 11 high to 12 right here. So buy side gets taken out. So then we would target the other side, which is your lunch trade. You're rating whatever sell stops, buy stops you have in that area. Okay, so we trade lower. I mean, there's not much significance here. Like we chop, you know. We have ES over here. Pretty obvious draw. That new day opening gap. So we trade all the way down here. And I do exit a little early. I'm taking off about a few R. I mean, we had like, I can't even count how much R we had here. We had like 13 R. We had like 15 R. So I probably took off like 2 R here. That's fine with me. I saw that we were getting very choppy. I also have another screen that I look at, which is I usually have the 1 or 2 minute. And I saw that we were getting very choppy, and I didn't want to risk any of my profits. Like, it's pretty obvious where price is drawing to, but just that peace of mind that I took this big trade. I've already taken a large trade, a large profit. Like, I just want to get out. I just want to get out of the market. I want to start fresh. And this was it. I was super happy, super stoked with my result of this trade. Like, really insane. I hope you guys enjoyed the video. I really gave you guys my bread and butter. I can't say that without laughing. But seriously, I hope you guys took good notes. You guys understood the lesson. And overall, if you could take anything away from this, it's going to be focus on the higher time frame and the bias, and your entry will come last. If anything, risk management is very important. Your psychology, your discipline. Bias, where price is going, is more important than your entry. If you could have good entries right now, it should be higher time frame. I know I'm not setting a great example by entering on these lower time frames. That's because I'm experienced with them and I know how to manage my risks with them. But right now, really, you should have wide stops, large take profits and just hold them, you know. The market is not easy right now. It's very choppy. So if you could get into a wide set position and you could ride it out, then you'll be good. But overall, I hope you guys enjoyed the video. You guys take care.